Worldwide markets this week. What's driving Purple Group, owners of EasyEquities, to about 150% gain this year? Bull case for SA Inc. as we are set to be removed from the grey list later in October. Top 40 hits 100,000. Boxer update, Nvidia self-dealing, and the US has also seen a wave of delistings. I'm Simon Brown. This is Worldwide Markets, episode 650 for 1 October. It is recorded Tuesday afternoon. Worldwide Markets, powered by Standard Bank Global Markets, Retail, and Shyft, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. Shyft, powered by Standard Bank. Thanks to Standard Bank, thanks to Shyft for sponsoring the show. Let's kick off with Purple Group, owners of EasyEquities. I own shares in Purple, have for a while. I got them during the pandemic, 50 cents, and then sold a bunch of it at 3 Rand and some change. Rights issue, beginning of mid-2023, call it 2 and a bit years ago. I subscribed to that and I picked up some more. I recall around the 70, the 70 odd cents. Anyway, I hold some of the Purple shares. That's an important point we need to know. But the stock has been having an absolute tear for the year. And I've mentioned it other times this year, not the first time we were bringing it up. Yesterday in particular, that being Monday, was a really, really crazy day. It had closed the previous day at closed at 233, got as high as 274 and closed at 260. Tuesday, today, as I'm recording, one point it got down to 213, but it's now trading around the 252. So it's off about 3%. And a lot of folks, Anthony Clark tweeted around it. He said, look, it's not a stock I follow, which is a fair shout. A lot of folks were like, insider trading and the like. And, no, it's way simpler than that. They had results back in February. Their year end is August. So they had the interim results back in February. And those interim numbers were much better, driven in large part by inactivity fee. They call it non-revenue income. I think they call it a loyalty program. That monies that you're going to pay potentially, I think it can be as much, 25 Rand a month, which could be 300 Rand a year. That was sort of half of their revenue that they got. But there's a bigger story happening here for Purple, and that is a booming market. Our top 40 hit 100,000 points on Monday for the first time ever. Massive number. Our market is up hugely this year so far. Resource indexes more than doubled. Thank you, gold stocks. Stocks like AngloGold Ashanti, almost 200% this year. And the other gold stocks are doing as well. We've got PGMs coming to the party. So we're seeing a robust stock market. We're seeing Bitcoin hitting all-time highs and settling at around the $110,000, $115,000 per coin. And what does that do? Well, that drives interest in a market. No one wants a bear market, but a market making highs, gold stocks, cryptos, and EasyEquities has all of that. So they are probably seeing faster client acquisitions, helped in part by their relationships with Capitec and Discovery Bank. Remember, Discovery Bank at profit ahead of target, and a good number. I'm trying to remember, is it 1.2 million clients, some crazy number like that? That is certainly helping. So getting new clients on board, and existing clients are making money. And when you make money, what do? Well, you tell your friends and they come and you sell some of the shares and you buy some more shares. In other words, increased activity. Now, they made it the 6 months. They made 2.36 cents. 2.36 cents per share in headline earnings per share, a very, very modest amount. That was to February. So it had an inactivity fee in it. That's done very well for them. But by that point, we were a lot more worried about what was happening with the US. Now, we hadn't yet had Liberation Day tariffs. They were still on the horizon. But we've seen that volatility, massive April sell-off, and then just a run higher. By everything, whether you were buying Mag 7s, S&P 500s, Australia, France, Germany, man, it's just been money all over the place, and that is good for stockbrokers. I know, I've worked at one. I also saw the PSG Financial Services, old PSG Consult update earlier in the week. Was it Monday? I think it was Monday, which also a decent number coming out from them. So if they did 2.36 at the half-year stage, can they double it? Sure, that gives them 4.7. Let's round it to 5 cents earnings for the full year. A couple of you are saying, will we see a dividend? I don't think we will see a dividend. But Nick said they can do 5 cents. I think they can probably do closer to 5.5 or 6 cents for the year. But let's use 5. Current share price, R2.50, puts them on a forward PE of around 50 times. And that's a big number. 50 PE is a big number, but it's a perfectly fine number if you're growing the business at around 50%, which is what I expect from them. And this excludes their ventures into the Philippines. They've now got 3 ETFs, which have probably got, $1.5 billion of assets under management. That's going to be earning them a whole lot of money. Emperor's asset management's always been there, but not made necessarily that much profit. So I don't think this is a surprise. I've been expecting it for the year, although back in Jan and back in the Liberation Day sell-off when things were ugly, it was like, how's this going to play out? But it's playing out very well, and stockbrokers making money. I know, I talk to them all the time. They are having a good time with it. So I don't think it's a surprise, and I don't think it is anything to be suspicious of. What we have at this point in time is just a market that is bullish, and stockbrokers make money in bullish markets. We've got our next Power Hour on the 16th of October. That is 2 weeks Thursday, 5:30 in the evening, webcast or in person at the Standard Bank head office in Rosebank, Johannesburg. We're looking at Warren Buffett, Blueprint, Investing Principles for a Lifetime. Warren Buffett is retiring at the end of this year from Berkshire Hathaway, and he certainly has been, in terms of investors, one of the most successful, but without a shadow of a doubt, I think for this generation, the best known. And in previous times, there's been Peter Lynch and others. But in this generation, the last 20 or so years, it's been Warren Buffett. So I want to dig into, what is he? He's no longer the value investor. He's growth at a reasonable price type of investor, kind of Ken Fisher in a sense. He talks around, the buy something and be happy for the market to close for 10 years. He talks around a moat. He talks around that sort of margin of safety. We're going to delve into all of those and how can we put them into our investing. JustOneLap.com/events, more information and booking. So let's talk around the bull case for SA Inc. Now, to be clear, I mentioned a moment ago, our top 40 is at 100,000. That's a giant number, but it's, thank you, gold and to a lesser degree, it's resources, but mostly gold and to a lesser degree PGMs. And make no mistake, that's lovely. The banks are doing okay, but we're not seeing very much. For example, the fashion retailers have all been under severe pressure this year. They ran last year. Mr. Price was up 100% last year, and now it's down some 30-odd% so far this year. What is that bull case for SA Inc.? Well, there's a couple of things. Eskom just came out. They made a profit, some 24-odd billion ZAR before tax. Last year, they lost about the same number of billions. There were still some issues with the audit, but the key point is we have electricity that works. Load shedding is largely gone. Kusile Unit 6 has finally come on stream. To be clear, decades late and multiple times over budget. It's the most expensive, along with Medupi, most expensive power plants in the world. But that brings 800 megawatts onto the system. Again, load shedding, each stage is about 1,000 megawatts. So load shedding is behind us. Now, that helps. It was a cost. It was more than a cost. I've spoken about how it was emotionally draining as individuals, power out, having to arrange dinner around power outages. I didn't even have kids, and I don't know how families with kids did it. But that's a really, really good thing. We got the grey listing, and I'm not sure, I've heard 2 dates, 24 October and 25 October. And the short version is that the FAFTA will meet, they'll have their plenary session, and they've been doing in-country visits, ourselves, Nigeria, others, and now they make the announcements. It really is a box-ticking exercise. We had 22 boxes to pick. I was at an event earlier in September, and I can't give T's and C's because it was a please don't quote me event, but a high-ranking official involved in the process says, we've ticked the boxes. It's now a formality. We will be off that grey list. I don't know if it's 24 or 25, but we will be off the grey list in later October. And that's important. Does it immediately give us GDP growth? No. But I know of some businesses, particularly in the financial services space, who've just stopped doing business with South Africa or South Africans. You've tried to open a offshore account or something, and the massively increased levels of paperwork. There are some investment funds whose mandate says, we don't touch countries that are grey listed. It is an important point. And we've been there since February 23. So, 2.5 years to get us off. That is a biggie. We've also got a weaker oil price, although it did rally a bit while I was on holiday last week, and a stronger rand. And both of those are going to continue. The oil's probably going to get still weaker. The rand is probably going to, in the immediate 17, longer term, I think 15. And I say that noting that there might be ridicule in time, but I do think that the trend is significant and real. And what does that do? Well, it makes imports cheaper. That's nice. But it makes fuel cheaper. For the average low-income South Africa, fuel is one of your big expenses. A third to a half of your salary, if you have a job, goes on transport. Now, are we going to see taxi fares come down? No, we're not going to see that, but they won't go up. For the private person in the middle and higher income, it means that to fill a tank of petrol is going to cost you less. You've got that extra money to go and spend. We also know the two-part story. We also know inflation is down. We also know that rates are down. And rates get interesting. So we had the FOMC cut. We had the MPC not cut. That means the difference between the two is getting wider. If we get two more cuts, October and December, from the FOMC, and I think October is currently an 86% probability and December is a 66% probability. If we get those, we would have had 75 basis points, 0.75% of cuts from America and none from us. And that means that there's that real interest rate differential, which will see money flowing into South Africa, which will strengthen our rand, which will reduce petrol and imports and the like. And yeah, it takes some of the shine off the gold miners who report in ZAR, but broadly, for the consumer, that's another win. Or the MPC goes and cuts rates and says, hang on a sec, we need to kind of keep up. If you remember on the way up, the MPC, and I can't remember if they said it directly or if they alluded to it, but they certainly said, we want to be careful about this gap. We don't want it to get too big or too small. We kind of want to maintain between the two economies and the gap on the short-term interest. And that is an important point. We'll also get our bond yields are coming down, and that means we can borrow the money that we need at cheaper rates. It means interest bills come down, T's and C's, because of course we need to borrow more, but it means the interest on our debt, which we're rolling over, is ultimately a little bit lower as well. So there is a bull case forming. Now, not a bull case which says, run out into the streets and buy every cheap stock that you can, but certainly a bull case forming. And what I'm going to do is next week, I'm going to dig into, I'll run some scans on my Koifin. Let's go look at some of these cheap stocks. We had an update from CMH, a trading update. They're expecting headline earnings around 22 to 25%. I've been talking about vehicle sales all year as they improve. We've seen Motors doing well. We've seen CMH doing well in the process. So I think that there is a bit of a bull case starting to form. And talking around trading updates, we had a Boxer update that came out on Monday. Like-for-like sales for the full 26 weeks to August up 5.3%. Turnover up 13.9%. That's actually an acceleration. At the 17-week stage, when they gave an update to 29 June, like-for-like sales was 3.9, turnover up 12.1, so they are getting ahead of themselves. The HEPS is not that brilliant because there's a lot of extra shares in issue and a lot of costs, one-off costs associated with the listing. But headline earnings between 108 and 118 cents. Let's call it 115 for simplicity's sake. If they're going to earn 115 cents for the full year, that does put them currently on 115 for the 6 months, double it to 230. It puts them on a PE of around about 28. I think that's a little bit expensive. I can buy ShopRite at this moment on a PE, and I need to double check my numbers here, but I think I can get ShopRite on a forward PE of a whole lot cheaper. Yeah, I can get ShopRite on a forward PE of 18. I'm not sure. I appreciate boxes probably growing faster. They're smaller. They're in a much more focused niche area. It's a low income, lower LSM sales. But I do suspect that, I don't know, to me, boxes just looking a little bit expensive. We had a whole lot of deals. A couple of weeks ago, we had a deal where it was announced NVIDIA was going to be investing into Minstrel. That is the French sort of chat GPT. A little before that, NVIDIA invested into the CoreWeave IPO. More recently, we've had NVIDIA announcing $5 billion into Intel, and last week they announced $100 billion of investment into OpenAI. I have not been thrilled by this. This is ultimately self-dealing, and I'll give you an extreme example that happened in the dot-com days. And what we had there is like Yahoo, for example, would go and invest 30 million in a startup. And that startup would then spend the 30 million on Yahoo advertising or whatever the case may be. And that's what I mean by self-dealing. NVIDIA is putting 100 billion into OpenAI. There's a lot of T's and C's. But what they're doing is OpenAI is one of their biggest customers, and they're saying, hey, here's some money to stay as our customer. The same with Minstrel, the same with CoreWeave. Intel, a bit of a different story, but I'm not thrilled with this. I mean, the key difference now to then was that there are real business models in these OpenAIs and Intels and the like. NVIDIA makes huge amounts of money. But I mean, when we had Oracle explode 2 or 3 weeks ago, part of it was all these massive sales that they'd done. One of them was OpenAI, and I forget what the numbers were, but basically it was more billions, more tens of billions than OpenAI has. OpenAI says, we're going to spend this money that we don't have on data centers that Oracle hasn't yet built. Look, I hold NVIDIA, and right now I'm a happy holder, but I'm keeping a close eye on it. Let's say that, most certainly. And then something which popped up in an email that I got earlier, I think earlier in the day, or maybe when I was on holiday, I'm not sure. We talk around the spate of delistings that have happened on the JSE. In the last 20 or so years, we've gone from 600 or 800 listings to 300 or 400. We've halved in size. Same's happened in the US. They've gone from 8,000 plus listings in 1996. They've now got 4,010 in 2024. So over, what's that, a 28-year period, the number of listings in the US has halved. This is, I mean, the problem that we have in the JSE is we don't get many new listings. At least in New York and with the US stocks do get a lot of listings coming through, but we don't get those. But the point is, and I've talked around this before, what's driving it? Well, the availability of private equity, the availability that companies can stay private for so much longer and IPO so much later. And we've seen that across with new listings coming to the market. And it does mean that they're typically late stage listings and not nearly as attractive. OpenAI will list, but by the time it lists, it's already going to have a 3, 5, 800 billion valuation instead of listing at the 50 billion valuation and letting us, the private clients, enjoy the growth to half a trillion, a trillion and onwards. Instead, we get in very, very late, and it's the private equity venture capitalists who make the real money. But it is a global trend, and I think that's an important thing, that it's not just the JSE. The problem with the JSE, as I say, we're not getting any large, big listings coming. And more than that, we were a small market to start with. And now we're just, a whole lot smaller. And that is not unimportant. Worldwide markets, powered by Standard Bank Global Markets, Retail, and Shyft, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest Forex rates anytime, anywhere. Shyft, powered by Standard Bank. We'll leave it there. Thanks to Shyft, thanks to Standard Bank, thanks to everyone for feedback on my show last week, my second brain system. A lot of you mentioned, is it Obsidian? I have downloaded it on all my devices, and it overwhelms me. I'm going to play with it a whole bunch more. Let's see. As I said, I'm using Evernote. It's clunky. It's not great. But Obsidian, frankly, scared me a whole bunch. But let's have a look-see. It is open source. It is free. Some cost in terms of if you want to do the syncing. But I will spend some time. Thanks to everyone who commented on that. And we will leave this show there for this week. My name is Simon. We'll chat again next week. There are 11 weeks until I'm on leave, which means, well, this show and then 10 more after that. As always, look after yourself. If you can, look after somebody else as well. Cheers all.